This video is created by Jagrat Creation. It is on retirement of a partner. I wish to solve one sum here before you on retirement of partner. Observe the sum on the screen. This is the sum which I wish to solve here before you. Maya, Mamta and Mohini are the partners sharing profits and losses in the ratio of 2:2:1. Their balance sheet as on 31st of December 2017 was as follows. Building, machinery, furniture, stock, debtors less bad debt reserve, cash on hand, total 1,80,000. Capital of Maya, Mamta, Mohini, profit and loss account 10,000, creditors 15,000. Mamta retires, middle partner. On the above date, and the following conditions were agreed upon. Building to be valued at 49,500, machinery to be depreciated by 10%, bad debt reserve is to be maintained at 5% on debtors, market price of stock is for 10,000 and 40% less than book. Market price of stock for 10,000 is 40% less than the book value. It's an important adjustment. Creditors include 500, which was no more a liability, so decline in liability. Mamta's capital account is to be credited for 16,000 for goodwill, debiting Maya's capital account by 4,000 and Mohini's capital account 12,000. So 4,000 and 12,000 is the amount paid by the continuing partner to a retiring partner. So this 4,000 and 12,000 shows the gain ratio. So gain ratio between continuing partner Maya and Mohini is 4:12,000. That is 4 3s are 12. 1:3 is the gain ratio. That's an important point to be understood by the students. Mamta is to be retained 50,000 as loan in the firm, and the remaining balance is to be paid in cash. The entire capital of the new firm is 1 lakh between Maya and Mohini in the new profit sharing ratio. Notice that you are not given the new profit sharing ratio. You are given the old profit sharing ratio 2:2:1, and you are given gain ratio 1:3. We are required to find out the new profit sharing ratio, and the total capital of 1 lakh is required to be maintained in a partnership firm and in a new profit sharing ratio, and for that also you are required to find out the new profit sharing ratio. The necessary adjustments are to be made in cash for this purpose. Following from the above particulars, prepare profit and loss adjustment account, capital account of the partners, and the balance sheet of a new firm after retirement. Let us start. Now, these are the adjustment. Relevant items are recorded, are identified in balance sheet with red color. I write the profit sharing ratio at the top for my reference. Profit and loss adjustment account, balance sheet, cash account, capital account. Let us start with revaluation adjustments. So consider the revaluation adjustment. First revaluation adjustment. Building is to be valued at 49,500. What is the value of building in the balance sheet? 40,000. Valuation made is how much? 49,500. How much is the increase in the value of building? 49,500 minus 40,000, 9,500 is the increase in the value of building. That will be credited to profit and loss adjustment account, and the new value of building 49,500 will appear in the balance sheet. So, increase in value of building 9,500. 49,000 is the new value of building that will appear in the balance sheet, and 9,500 will be credited to profit and loss adjustment account. Building account debit 9,500 to profit and loss adjustment account credit. That is the journal entry that you can write for this revaluation. Alternatively, you can say this profit and loss adjustment account with another name. The another name of that is revaluation account. Next, machinery to be depreciated by 10%. Machinery is 25,000. 10% thereof is 2,500. So, decreased value of machinery is 22,500 will appear in the balance sheet, and depreciation will be debited to profit and loss adjustment account, being decline in the value of asset depreciation. Decline in the value of asset is identified as loss, and losses are debited to profit and loss adjustment account. So, this 2,500 has been debited to profit and loss adjustment account. Next, bad debt reserves to be maintained 5% on debtors. Debtors are 50,000. 5% thereon is 2,500. So, required bad debt reserve is 2,500. Bad debt reserve already exists is 2,000. So, 2,000 bad debt reserve provision is there. We want to have a provision of 2,500. So additional provision required is 500. The additional provision can be made by debiting profit and loss adjustment account by 500. So this is how 2,500 are deducted from the debtors, and this 500 additional provision required is debited to profit and loss adjustment account. So if you debit 500 to profit and loss adjustment account, the total bad debt provision will work out to be 2,000 plus 500, 2,500, which is being required as per the adjustment. Now next, market price of stock what 10,000 is 40% less than the book value. Very important adjustment. Let me prepare a working note for that. So 26,000 is the stock. Now market price of stock what 10,000, 40% less. So 10,000 minus 40%, 4,000 less. So market price thereof is 6,000. So decline in the market price totally against the total stock of 26,000, 4,000 is the decline. So 26,000 minus 4,000, stock is valued at 22,000. This stock valued at 22,000 will appear in the balance sheet, and the decline will be debited to profit and loss adjustment account. How much is the decline in value of stock? Stock of 10,000, 40% less. So 10,000 into 40%, 4,000 less. So 4,000 is to be deducted from the value of total stock. So 26,000 minus 4,000, 22,000 will appear in the balance sheet, and this 4,000 is debited to profit and loss adjustment account. Next, creditors of rupees 500 which are no more a liability. So there is a decline in liability which is a gain. So 15,000 minus 500, 4,000 is the creditors to be shown in the balance sheet, and the gain because of the decline in liability 500, that will be credited to profit and loss adjustment account. So 500 is credited to profit and loss adjustment account. This is how the revaluation and adjustments are considered. After considering this revaluation adjustment, copy the remaining details of the balance sheet. So capital balances will be recorded on the credit side of Maya, Mamta and Mohit's capital account. So 45,000 opening balance, 50,000, 60,000. Profit and loss account 10,000 will be distributed in the profit sharing ratio 2:2:1. So 10,000 distributed in the ratio of 2:2:1. So that will work out to be how much? 4,000, 4,000 and 2,000. So profit distributed amongst partners in the ratio of 2:2:1. This is 2:2:1 distribution. Then this cash balance 22,000 will appear in this cash account debit side. And this furniture will appear in the balance sheet 19,000. 22,000 is the cash balance. This is how the remaining details of the balance sheet is recorded at an appropriate place while solving the sum. Now next step, close this profit and loss adjustment account. Profit or loss on revaluation of assets and liabilities will be distributed amongst partners in their old profit sharing ratio, that is 2:2:1. So here 9,000 plus 500, so 10,000 minus 7,000, so 3,000, distributed in the ratio of 2:2:1. So 1,200, 1,200 and 600, because 2 plus 2, 1, 5. 3,000 divided by 5, 600. Double it, 1,200 and 1,200. That will be credited to the partner's capital account. So partner's capital account is being credited with profit and loss adjustment account. Credit balance means profit on revaluation adjustments. Now the goodwill adjustment. Mamta's capital account is to be credited with 16,000. For goodwill, debiting Maya's capital account 4,000 and Mohini's capital account by 12,000. So 4,000 and 12,000 is a payment made by Maya and Mohini to Mamta. So this shows the gain ratio. So here let me give the effect. Maya's capital account debit 4,000. So 4,000 will be debited here. Here it's credited. So total 16,000 rupees are credited to Mamta's capital account. But it has been debited 4,000 to Maya's capital account and 12,000 to Mohini's capital account. This is how debit entry is recorded. This is a goodwill adjustment. Goodwill adjusted to the capital accounts of the partners Here goodwill is not raised, but goodwill is adjusted to the capital accounts of the partner. And how this adjustment is paid, that is the amount is given to you. That shows that this is the gain ratio. Gain ratio is 4 3s are 12, 1:3. So this shows the gain ratio. Very important point. Now, consider the capital adjustment. Mamta is to retain 50,000 as loan. So let us find out the balance of Mamta's capital account. It's a retiring partner, so capital is converted into loan to the extent of 50,000. So Mamta's capital account debit to Mamta's loan account, and the remaining amount is paid in cash. So 71,200 minus 50,000. So 21,200 is the cash paid to Mamta. Mamta's capital account debit to cash account. This is a redemption, partial redemption of capital to the retiring partner. Now, consider the capital adjustment of remaining partners. The entire capital of the new firm is 1 lakh. Between Maya and Mohini, in the new profit sharing ratio, we are required to find out the new profit sharing ratio. Here, old ratio and gain ratio are available. So let me prepare a working note. Old ratio 2:2:1. So 2/5. Gain ratio is what? 1:3. So 1/4 and 3/4. Now Mamta's share was 2/5. It is gained by Maya and Mohin in the ratio of 1:3. So let me find out the exact amount that they have gained. So share of Mamta 2,525 received by Maya. How much? 1/4 of 2/5 received by Mohini. 2/5 into 3/4. So 1/4 of 2/5. So 2/5 is the share of Mamta. 1/4 received by Maya. So 1/4 of 2/5 and 3/4 of 2/5 is received by Mohini. So 1/4 of 2/5, 2/20, and 3/4 of 2/5, 6/20. This is the share received by continuing partner Maya and Mohini. Now if I want to find out the new profit sharing ratio, 2/2/5 plus 2/20. So 2/5 plus 2/20. So 8 plus 2/20, 10/20. And Mohini, old share was 1/5, 1/5 plus 6/20. So 5 4s are 20. So 4 plus 6, 20. 1:1 is the new profit sharing ratio. So this is how new profit sharing ratio is worked out. So total capital 1 lakh is to be kept in the new profit sharing ratio. So capital intended to be maintained by the continuing partner is 50,000 rupees each. So this is how this new profit sharing ratio is found out. And the capital to be carried forward after retirement will be equal proportion. Which amount is to be bifurcated in equal proportion? This 1 lakh rupees. So 1 lakh rupees bifurcated in equal proportions of 50,000, 50,000 is the closing balance of capital account for Maya and Mohini to be maintained, and this closing balance of capital account will appear in the balance sheet. Now to maintain a capital of 15,000, how much amount Maya is required to bring? So Maya's credit balance is 45,000 plus 4,000, 49,000 plus 50,200, 50,200 minus 4,000. This is the existing capital balance which is short. So let me have a total 54,000 minus all these things. That is the amount that Maya is required to bring. So amount brought by Maya is 3,800. So to maintain a capital of 50,000, Maya is required to bring 3,800. If she brings 3,800, this closing balance 50,000 gets maintained. Similarly, here also the capital balance is to be maintained 50,000, 62,600, and this side total is 62,000, and this is 62,600. So here the credit side total is more than debit side. So refund of capital will be made in case of Mohini. So 3,800 brought cash account debit to Maya's capital account, and here 62,600 minus. So 600 is the cash brought by Mohini. So cash paid to Mohini. Mohini is the receiver, debit the receiver. Mohini account debit to cash account credit. So this is how cash account is to be credited for payment made to Mohini to maintain a capital at a balance of 50,000. Now find the Balance of capital account 25,800 minus 21,800. 4,000 will appear on the balance sheet asset side. Now have a total of balance sheet. Balance sheet total should agree. So this is how this sum gets solved. The important point of this sum that you are given the gain ratio in indirect manner. On the basis of gain ratio and the old ratio, you are required to find out the new profit sharing ratio. Capital is required to be bifurcated in the new profit sharing ratio. And to that level, the capital is to be maintained after retirement. For that, necessary cash is brought or withdrawn is an important point of this sum. I have tried to explain you this sum. I feel that you have followed all these things. Thanks to Allah.